I'm a big believer that there's not enough gold in the world to cover the amount of paper that has been sold on gold. So if we're getting a little bit nervous and you get a little bit of short squeeze, that brings the professionals in to buy.
You're watching Silver News Daily. Subscribe for more.
They're calling it the final meltdown. The day when the dollar dies, banks vanish overnight, and the financial system as we know it collapses into dust. Picture it. Markets in chaos, inflation running wild, and governments powerless to stop the bleeding. But amidst the wreckage, one asset doesn't just survive, it soars: silver. And not just to $30 or $50. No, according to Todd Bubba Horwitz, silver is rocketing past $150 as investors worldwide scramble for what might be the last financial lifeline before total annihilation. Think about it. When the dollar collapses, when banks can no longer be trusted, where does the world turn? Precious metals. Gold grabs the headlines, sure. But silver? Silver is the metal that runs when panic sets in. Bubba Horwitz isn't just making a prediction, he's sounding the alarm. Hyperinflation is coming, the banking system is on the brink, and the dollar? It's dying. This isn't some distant theoretical risk. The pieces are falling into place right now. And when the fuse finally burns down, silver won't just climb. It will explode. $150 an ounce will be just the beginning. So what's driving the surge? Why does Bubba Horwitz believe silver is the last safe haven before the financial system crumbles? Stay with me, because what you're about to hear could change everything you think you know about the future of money.
Up to 10%, which would be almost close to 300. I'm not saying it'll go that far, but I could see that happening. I mean, I have a target that I'm looking for, which is actually 27.13. Okay. But it doesn't mean that I can't change my mind in the next couple of days. It depends how the markets react. When markets go in a parabolic direction, they have a couple of ways to resolve it. Either they continue to go parabolically higher and eventually collapse, as we saw the markets in the 90s, or they will go in consolidation and then either rise or fall from there and change directions, or they'll pull back. The most healthy, the best I could see for gold there is a straight pullback here. And it could be 5%. Again, I've got a target of 27.13. It wouldn't surprise me if we hit 3,000 first. It wouldn't surprise me if we had one big spike. I mean, we saw Friday, you had a $60 sell-off or so. It wouldn't surprise me to see a run to 3,000. Your whole numbers, big whole numbers, especially when they're associated with new all-time highs, are like a magnet. And we're going to hit there. Whether or not it's before we go down or after that, I don't know. But by the end of the year, I would certainly not be surprised if gold rose another 10 to 12% from where we're trading right now by the time it's done. So I would use sell-offs as a buying opportunity.
Hyperinflation. It's the silent destroyer of wealth, and when it hits hard. Picture this: your savings, your income, your purchasing power diminished overnight. History shows us that when currencies crumble under the weight of hyperinflation, investors don't just stand by and watch. They run fast toward hard assets and silver. Silver becomes the shining beacon in the darkness. Let's rewind to the Weimar Republic in the 1920s. The German mark lost all value. People needed wheelbarrows of cash just to buy a loaf of bread. But silver? Silver preserved wealth. Those who had it survived the economic nightmare. Fast forward to Zimbabwe in the 2000s, Venezuela more recently, the pattern repeats. When paper money turns worthless, silver stands strong. And here's the thing, Bubba Horwitz isn't making wild claims without reason. The warning signs are everywhere. The US government's debt is soaring past $34 trillion. The Federal Reserve keeps printing money at a breakneck speed. Inflation isn't just a number, it's a ticking time bomb. When that bomb detonates, it will tear through fiat currencies like paper in a fire. Hyperinflation doesn't happen slowly. It creeps in and then explodes. One moment, prices are high. The next, they're skyrocketing out of control. And as confidence in the dollar evaporates, silver becomes the last lifeline. Why? Because silver is both a monetary metal and an industrial powerhouse. It's tangible, it's finite, and it can't be printed at will. Investors around the world are waking up to this reality. They're preparing for a future where dollars won't be worth the paper they're printed on. And when that moment comes, when the masses finally realize what's happening, silver's price won't just rise, it will surge. Past $50, past $100, and according to Bubba Horwitz, well beyond 150. Because when hyperinflation detonates, the scramble for silver won't be a slow and steady climb. It will be a frantic rush. The last chance to grab the metal before it's out of reach. The question is, will you be ready when it happens?
I think if you want to, gold, I think is great. We said all along, the few times we talked in the last 6 months, that we fully expected to see it continue to rally and look for over 3,000. I would expect here probably a little bit of a pullback from a trading standpoint. It's a little bit overbought. It's a little bit overdone. But I think it's telling everybody that inflation is still rising. And of course, we saw the numbers last week, CPI and PPI, which indicate that we got higher inflation. And, I believe in President Trump, and I think he's going to do a lot of good stuff. But there's going to be some pain to start with. And the inflation is not going to go down until we get everything back in the pipeline, so to speak, especially when it comes to oil, because with the oil, that's a big percentage of the inflation. So I think gold is riding the inflation wave. It's riding the safe asset play. A lot of reasons for gold to go higher. But as I said earlier, I look at it now and I would expect a pullback. And I wouldn't be surprised if we had a 7 or 8 to 10% pullback in gold, although I still like it and I would be looking for opportunities to buy it. I think that from a standpoint that it's basically going up parabolically, those markets don't usually last, and we should see some sort of a pullback here.
The banking system, it's supposed to be the backbone of modern economies. But according to Bubba Horwitz, that backbone is about to snap. Think about it. What happens when trust in the banks evaporates? When people wake up to find their accounts frozen, withdrawals limited, and entire institutions vaporizing overnight, the panic would be instant, and the rush to silver would be unstoppable. Let's break this down. Banks operate on a fragile system, fractional reserves. For every dollar you deposit, the bank keeps only a fraction on hand. The rest? Loaned out, invested, leveraged. In times of stability, this works. But when confidence cracks, it crumbles fast. Just look at the 2008 financial crisis. Lehman Brothers, a 158-year-old institution, gone in a weekend. Washington Mutual? Vaporized. And today, the risks are even greater. Why? Because global debt levels have exploded. Central banks have propped up markets with cheap money for over a decade. Now, with rising interest rates and tightening liquidity, the cracks are showing. Commercial real estate defaults, risky derivative exposures, these aren't small issues. They're the potential triggers for another banking collapse. But here's the part no one talks about. When banks go under, the government's safety net isn't guaranteed. The FDIC, it ensures only a fraction of total deposits. If a major collapse happens, that safety net could snap. When that realization hits the public, there will be a stampede, out of banks and into hard assets. And silver? Silver will be front and center, because unlike fiat money, silver holds no counterparty risk. It's not a promise on paper. It's value you can hold in your hand. Bubba Horwitz knows this. He's warning that the next time banks teeter, it won't be a slow fall. It will be a collapse so sudden, so total, that investors will be left scrambling for the only lifeline left: silver. And if you think this sounds extreme, consider this. Central banks themselves are hoarding gold. Why? Because they know what's coming. But silver? Silver is the people's metal. Cheaper, more accessible, but just as potent when fiat trust vanishes. So when the next shock hits, when the banks vaporize and paper wealth evaporates, where will you be? Because by the time the headlines scream banking crisis, silver's run may already be well underway.
Well, how about if we just follow what the original laws were before the Federal Reserve was put into play? Okay, the Federal Reserve is nothing but a cartel, okay, owned by the banks. Why don't we just do, if you remember, well, you may remember, you're young, and I'm young, too young to remember it as well, but the original gold to silver ratio is supposed to be 15 to 1. Okay, it's now 90 to 1. Okay, the banks were supposed to be able to lend on assets that they held, okay, which in those days was gold. Okay. In fact, there are stories going back, if you've read The Creature from Jekyll Island, that they used to take rocks and paint them gold, throw some real gold on top, so it looked like they had more, so they could lend it out. Okay. What Vicente, I believe, is saying is that if you're going to lend out 10 to 1, you better have the assets in your vault to lend out that 10 to 1. You can no longer lend out on air or no longer take a loan from the Federal Reserve take a liability, spin it through accounting, turn it into an asset, and then lend out $10 million.
The dollar, once the unshakable cornerstone of global finance, is now on life support. For decades, it reigned supreme, propped up by the world's confidence and backed by the promise of the U.S. government. But as Bubba Horwitz warns, that confidence is crumbling fast. The dollar's decline isn't just a possibility, it's unfolding right now. And when the dollar falls, silver rises, surging past $150 as investors scramble for something real. Let's look at the facts. The United States is drowning in debt, more than $34 trillion and climbing. Interest payments alone are draining the government's coffers. The solution? Print more money. But every new dollar printed dilutes the value of those already in circulation. It's a vicious cycle. More debt, more printing, more inflation. And the world is starting to lose faith. But there's more. Countries around the globe are quietly moving away from the dollar. China and Russia, they're settling trades in their own currencies. The BRICS nations, they're exploring alternatives to the dollar for international trade. The petrodollar, long the bedrock of U.S. currency dominance, is under threat. If major oil producers ditch the dollar, its value could plummet overnight. And let's not forget inflation. While official reports try to downplay it, everyday people feel the pinch. Groceries, rent, gas, everything costs more. When inflation runs hot, the dollar's purchasing power weakens, and investors look for protection. Silver, with its dual role as both an industrial metal and a store of value, becomes the obvious choice. But here's where it gets critical. As the dollar weakens, central banks may have no choice but to lower interest rates again, flooding the economy with cheap money. In the short term, it might stave off collapse, but in the long term, it accelerates the dollar's decline. And every step the dollar takes downward is a step silver takes upward. Bubba Horwitz sees the writing on the wall. A dying dollar means investors worldwide will flock to tangible assets. Gold will move first, but silver will outperform. Why? Because it's undervalued, overlooked, and essential, not just for wealth preservation, but for industries driving the future. When confidence in the dollar finally breaks, it won't be a slow bleed. It will be a rapid collapse, a rush for real value. And as the dollar dies, silver will soar, past 50, past 100, and as Bubba predicts, past 150. The only question left, will you have secured your share before the masses catch on?
Well, I mean, banks are very tricky, and banks are really, they're like a cartel along with the Federal Reserve. I mean, you think about banking as a business model. They can borrow money from the Federal Reserve, on the Fed funds rate, right? And we've seen that over the past 6 months, the Fed funds have been cut 1% or 100 basis points. But if we go back to September 18th, the original cut, the 10-year notes were trading at 3.5%. The Fed funds rate got cut, which means that the bank, if they don't pass the rate cut off to the consumer, the banks are making more profit, which is exactly what has happened. So move the clock forward. We're 100 basis lower at the Fed funds rate, which does not help you and me, the consumer. The banks don't have, just because they got a rate cut does not mean they have to cut the rates for you, the consumer. So now the bank's borrowing rate is 100 basis points lower. The bank's lending rate is 100 basis points higher, saying the banks have got a 200 basis point extension or a raise, okay, to lend money. Now, again, the other problem is that when they borrow money from the Federal Reserve, okay, they can take that money and take that liability and turn it into an asset and then lend out 10 times the amount. So I think what Vicente is saying is no more. You cannot do it that particular way. I think that that's the problem. And that is what's created the banking problems we've had over the last 100 years have been directly correlated to the banks maneuvering, because knowing that they had the Federal Reserve to bail them out. Okay. And I think that Vicente is saying enough, where the Federal Reserve is not going to bail you out if you continue at this particular rate of basically printing new money. Because when a bank lends out at a 10-to-1 rate, okay, called fractional banking, they are actually creating new money into the system.
Silver isn't just money. It's the metal of the future. While investors rush to silver when financial chaos looms, there's another powerful force driving its value: industrial demand. This isn't speculation, it's happening right now. From solar panels to electric vehicles and cutting-edge technology, silver's industrial uses are surging. And this demand, it's relentless. It's global. And it's pushing silver to heights we've never seen before. Let's break it down. The green energy revolution is in full swing. Governments worldwide are pouring trillions into renewable energy, and solar power is leading the charge. Here's the catch. Solar panels rely heavily on silver. No substitute comes close. Silver's conductivity, efficiency, and durability make it irreplaceable. The solar industry alone accounted for nearly 20% of global silver demand last year, and that number is only climbing. But that's just the start. Electric vehicles are another massive driver. Every EV requires silver for batteries, electrical connections, and charging infrastructure. With major automakers pledging to phase out gas-powered vehicles in the coming years, silver demand from this sector is set to explode. Tesla, Ford, GM, they're all ramping up EV production. The more EVs on the road, the higher the demand for silver. And there's more. The rollout of 5G networks worldwide requires silver for its unparalleled conductivity. Silver is also essential in semiconductors, medical equipment, and even water purification systems. These aren't luxury demands. They're necessities in an increasingly tech-driven, eco-conscious world. But here's the twist. While industrial demand surges, silver supply isn't keeping up. Mining production has been declining, new silver discoveries are rare, and it takes years, sometimes decades, to bring new mines online. The result? A growing gap between supply and demand. And when demand consistently outpaces supply, prices don't just rise, they spike. Bubba Horwitz knows this. He's warning that as hyperinflation and banking collapses push investors towards silver, the industrial sector will already be pulling it in another direction. This double squeeze, monetary and industrial, creates the perfect storm for a silver price explosion. Imagine the scenario. Investors panic buying silver as the dollar collapses, while industries compete for the same shrinking supply. That's how silver rockets past 150 and potentially much higher. Because when demand comes from both survival and progress, the price isn't just influenced. It's driven upward with unstoppable force. So the question becomes, with industrial demand climbing and financial uncertainty rising, how high can silver really go? Because this isn't just about investment anymore. It's about securing a metal the modern world can't function without.
I've always believed that they sell more paper, and of course, because, how often does somebody call their paper, right? How often does somebody go, I want my shares of gold? It's like you all remember the silver certificate, right? The dollar bill used to be a silver certificate. You could take that and claim $1 silver at the bank, Morgan silver dollar. Well, I think this is the same thing. And there wasn't enough silver dollars. I don't think there's enough gold. I think that is an issue because, of course, these markets continue to trade. They continue to trade on paper. And when it comes down to it, it's like a run on the bank. If everybody said, I want to cash in my paper gold, my futures for actual physical gold, I don't think there'd be enough. Well, I don't even know if you want to call it safety. I think it's a great play to buy gold here. I mean, you look at Trump's, finance guy, Bezant, he's a gold bull. Okay, there's your guy. You got Ron Paul. You got a big thing now talking about let's go audit the Fort Knox. Okay, which we haven't done since 1974. Okay, you got a lot of reasons to believe that gold is going higher, along with Bitcoin and cryptocurrency, because the new director is a fan of both. Okay, so again, I don't think that it's necessarily a safety play. Could be a currency play, and of course, we always hear about, well, the dollar's too strong and gold should be going down. Well, guess what? The dollar's going higher and gold is going higher. And at the end of the day, it's a perfect hedge. It's a perfect roundhouse to do that and use gold. But gold may again be indeed used as a currency once again, and I think that's an issue. And again, when you listen to Bezant speak, you can tell that he's a gold bug, and I think that we're going to continue to see this rally. And the last thing is I'm a big believer that there's not enough gold in the world to cover the amount of paper that has been sold on gold. So if we're getting a little bit nervous and you get a little bit of a short squeeze, that brings the professionals in to buy. And that's, I think, what they're doing.
Now let's talk about something most investors completely overlook: above-ground silver stocks, and why the reality of these inventories could be the fuel that sends silver soaring past $150. See, there's a common misconception that there's plenty of silver out there just waiting to flood the market if prices rise. But according to the latest data, that assumption couldn't be more wrong. In fact, most of the silver that exists above ground is essentially unavailable, regardless of how high the price goes. Let me explain. Above-ground silver stocks aren't just sitting in vaults, ready to hit the market. A huge portion of the silver is tied up in forms that simply won't re-enter circulation. We're talking silver locked away in coins, bars, silverware, and even jewelry. These forms of silver are hoarded, collected, and safeguarded by investors, institutions, and even governments. The incentive to hold on to silver, especially when financial uncertainty looms, is powerful. People don't let go of a proven store of value when the global economy is hanging by a thread. But it doesn't stop there. There's also silver embedded in industrial products, everything from solar panels to smartphones. And guess what? The silver in these products isn't coming back anytime soon. Recycling silver from complex electronics isn't just expensive, it's often economically unfeasible. So that silver, for all practical purposes, it's gone from the market. Here's where things get interesting. Despite what some might think, there's no real correlation between the total level of above-ground silver stocks and the price of silver. Why? Because the vast majority of these stocks are immobile. They don't respond to rising prices. Even when silver surges, these stocks don't suddenly appear on the market. But bullion stocks? That's a different story. Movements in bullion inventories have a direct impact on silver prices. And right now, investment demand is pushing bullion stocks lower. As these inventories get drawn down, especially during periods of financial stress, silver becomes even scarcer. And when the market realizes that the supply cushion everyone assumed existed doesn't actually exist, panic buying sets in. Bubba Horwitz understands this dynamic better than most. When investors scramble for silver, thinking there's a surplus available, the sudden realization that most of it can't be accessed will act like gasoline on a fire. Prices will spike violently as everyone chases an asset that simply isn't available at any price they're willing to pay. This is the hidden force few are talking about. While headlines focus on inflation or the dollar's decline, the truth about above-ground silver stocks lurks beneath the surface. And when that truth becomes undeniable, when the world sees how little silver is actually available, prices won't just climb, they'll detonate. Because when scarcity meets desperation, the result isn't a slow, steady rise, it's a vertical explosion. And that explosion, according to Bubba Horwitz, it's what will propel silver well beyond 150 an ounce.
Oh, I mean, again, you look at the markets you look at the equity markets over the last couple of weeks. Now, they've been higher, okay? Last week, the week, previous 2 weeks, we had those 2 Monday disaster days. That creates panic. And most investors do what we would call the wrong thing, okay? They sell their good assets trying to hold on to the crap. And of course, that would coincide perfectly with selling their gold, which they cannot help but be profitable on gold. So they like to take the winners off the table when that is exactly backwards. You want to let the winners continue to run until they tell you that they no longer can run. But that's why the average investor usually loses their, because they want to hold on to the dogs, the ones that are going down. And there's an old saying, buy the strong and sell the weak. Okay. It doesn't matter. Stay long the strong and get rid of the weak. But people don't do that. They do the exact opposite. So it makes a lot of sense to see people selling gold because it's been one hell of a strong asset and it should continue. But again, when you're dealing with human psyche, you're dealing with psychology, people don't want to take a loss. They don't look as their overall net worth. My net worth is $1 million. Okay. I'm not looking at it as a package worth $1 million. I'm looking at each individual asset. And I'm like, well, this one's losing. I'm going to hold it because it's going to come back. This one's really strong. I'm going to sell it because I want to take the money. Completely backwards thinking, which is very common in the investing industry.
Now, let's address the elephant in the room, the myths that have haunted the silver market for decades. Stories of bank manipulation, COMEX drains, and looming metal scarcity. These narratives have circulated for years, luring investors with promises of explosive price moves that never seem to materialize. But what if, this time, the story's different? What if the conditions Bubba Horwitz is warning about are finally setting the stage for these myths to become reality? Let's start with the biggest claim: bank manipulation. For years, people have believed that major financial institutions have been actively suppressing silver prices. And while some manipulation cases, like JP Morgan's $920 million settlement for spoofing precious metals markets, did occur, the broader claims often get blown out of proportion. However, here's where it gets interesting. Manipulation works when the market allows it. But when physical demand surges, when investors want actual silver, not just paper claims, cause Yanobus amount of manipulation can hold the price down. Bubba Horwitz believes we're nearing that breaking point. Why? Because as confidence in fiat currencies collapses and investors demand physical delivery, banks won't be able to meet those obligations. They've been operating in a system built on paper promises. But physical silver? It's finite. And when demand shifts from paper to physical, manipulation loses its grip. The result? A silver price surge that can't be stopped. Then there's the myth of the COMEX drain. The idea that investors could drain silver inventories from the COMEX, triggering a short squeeze and skyrocketing prices. Historically, these predictions have been exaggerated. But what if they're finally coming true? The truth is, COMEX inventories have been declining. And as global demand rises, the likelihood of a genuine squeeze grows. If investors start demanding physical delivery instead of cash settlements, the system could crack. And what about the so-called scarcity of silver? Critics say there's plenty of silver in the ground, just a matter of mining it. But mining isn't as simple as flipping a switch. It takes years of exploration, permitting, and development to bring new mines online. Meanwhile, industrial demand is soaring and above-ground stocks are largely immobile. So while silver may exist in theory, it's practically unavailable when the market needs it most. But here's the kicker. Who profits from these myths? Often, it's the same players who benefit from suppressed prices. Big institutions can accumulate silver cheaply while retail investors wait for a breakout that never seems to come. But Bubba Horwitz is signaling that this time, the perfect storm is brewing. The dollar's decline, the banking system's fragility, hyperinflation fears, and surging industrial demand are aligning. If enough investors believe the silver shortage narrative and demand physical delivery, it could finally force the market's hand. The myths won't just be stories. They'll become reality. And when that happens, the so-called last lifeline silver provides could become the most sought-after asset on the planet. The myths investors once doubted might be the exact reasons silver rockets past 150. Because when belief meets desperation, markets move. And this time, Bubba Horwitz says they're moving fast.
Well, I mean, again, I don't know if they'll change it, but I'm not worried about, again, the money is guaranteed as long as you follow the laws, right? It's, FDIC. So again, there's X amount of dollars, but you better have it spread out. If you have more than what is guaranteed, it should not be in one bank. That I will tell people that you better be careful of. This is what happened with the bank in California, the small bank that actually had all these depositors, and they made it good. Why they made them good, I don't understand. Why did the government back that bank up? I don't know. That's, to me, is a problem. Again, you're a capitalism system, business builds, you fail, you're out of business. Okay? In the banking's case, they fail, bail out the depositors, not the business itself. That's what I said. And banks are going to melt down. This is my concern, is we're going to see basically a repeat of '08, okay? Because the banks are well overleveraged, okay? And of course, unfortunately, you and me, the taxpayer, are going to have to pay for it again. Now, see, I go for, if the banks collapse, let them collapse. I don't care. You should not be bailing out a failing business. You bail out the depositors that are in that bank to avoid the run on the bank. You let the depositors know your bank's going out of business, but your money is going to be guaranteed by the government and we're going to pay you. So instead of going and bailing out the banks and letting them make a fortune through the bailouts once again, let's just take care of the depositor and let new banks come in and new our organizations come in. I mean, look what they did with the savings and loans in the 80s. Okay. Again, if you're a bad bank and you're over leveraged and you can't make payroll, go out of business. The government, instead of bailing out you, the bank, and all you guys, so you can make your billions of dollars. And I got no problem with billionaires, but I do have a problem with people that are in a business that has no risk of failure. Okay, that I have a huge problem with, right? You fail, you go out of business, that's the way it should be. You should not have the Federal Reserve backing you up, allowing you to be very
Let's turn our
irresponsible
focus to one of
with
the
your
most
lending
powerful
policies and
forces
what you're
shaping
doing,
silver's
okay?
trajectory,
And then
the Federal
allowing to
Reserve.
bail you out if it doesn't
The
work out.
Fed's every move, every rate decision, every policy statement ripples through global markets. And right now, according to Bubba Horwitz, the Fed's next moves could be the tipping point that sends silver surging beyond $150. Here's why. The Federal Reserve is stuck between two impossible choices. On one hand, inflation remains a persistent threat. On the other, the economy teeters on the edge of a slowdown. If the Fed raises rates aggressively to combat inflation, it risks triggering a recession. But if it cuts rates too soon or signals a dovish stance, it weakens the dollar and stokes inflation. Either scenario, bullish for silver. Let's break it down. If the Fed continues its hawkish path, raising interest rates to control inflation, borrowing becomes more expensive. Economic growth slows. In this environment, banks, already vulnerable, could face liquidity crises. The risk of defaults rises. And when faith in the financial system falters, investors flock to hard assets. Silver, with its monetary and industrial value, becomes a prime beneficiary. But what if the Fed pivots? Suppose economic data worsens, job growth slows, and pressure mounts for rate cuts. A dovish Fed signals lower rates ahead. The immediate impact? The dollar weakens. Inflation expectations rise. And silver, priced in dollars, surges. Lower interest rates reduce the opportunity cost of holding non-yielding assets like silver, making it more attractive. This isn't just theory. Look at recent history. When the Fed slashed rates during the 2008 financial crisis, silver prices more than doubled within 2 years. In 2020, as the Fed flooded the market with liquidity, silver surged by nearly 50% in just a few months. The pattern is clear. When the Fed eases, silver runs. But here's where it gets even more interesting. The Fed's credibility is under pressure. Markets are questioning whether the central bank can truly tame inflation without breaking the economy. If the Fed loses control, if inflation remains high despite rate hikes, the rush into silver will accelerate. Investors will seek protection from currency debasement, and silver, often overlooked compared to gold, will shine. Bubba Horwitz understands this dynamic. He sees a no-win situation for the Fed. Stay hawkish, and the financial system cracks, sending silver higher. Go dovish, and inflation roars back, also sending silver higher. In either scenario, silver stands to benefit. And let's not forget the psychological impact. The moment the Fed hints at rate cuts, markets will move in anticipation. Investors won't wait for the actual cut. They'll pile into silver, expecting the inevitable surge. So here's the bottom line. The Fed's next move isn't just about interest rates. It's about confidence. Confidence in the dollar, in the banking system, and in the broader economy. And as that confidence erodes, silver's appeal grows. Because when trust in paper money fades, when central banks can no longer calm the markets, silver doesn't just rise, it explodes. Bubba Horwitz is betting that the Fed's next misstep will be the spark. The only question left, will you be holding silver when the fire starts? Will?
I think that's a very loaded question, number one. But number two, I think it can be done. I'm all for tariffs. I mean, we had tariffs until 1962. Okay. I don't think tariffs hurt anything. I think actually tariffs benefit this economy because if you force people back into business in our country, okay, that brings in jobs, money, business, and industry, and we quit supporting the rest of the world, which I'm sick and tired of doing, quite frankly. Okay. I would personally like either North America, if we can work out with Mexico and Canada, or the United States of America to be an island. I don't want to, we don't need anything from anybody. Okay. And I'm sick and tired of all of our money outflowing elsewhere. Okay. And again, when you go back and you tie it back into, can you cut Medicare? Well, you could cut Medicare. And I don't mean cut it now, but if you were planning for it, the whole Social Security system, Medicare system, everything that was put into place was based on Social Security and an average living age of 62, which is me, and they allowed retirement at 65. So the Ponzi scheme they built actually worked for the time being. because when more people were dying at 62 and you couldn't collect until you were 65, it kind of worked out. The government was still using the money, but there was always kind of enough left over. I mean, it still was a Ponzi scheme, but now there isn't enough workers, okay, to pay into a system when people like me are collecting Social Security, okay? I have no business collecting Social Security, but I paid into it my whole life. I'm taking it, okay? But the true retirement age should be 78 to 80 now because that's the average living age. So what should be done, and maybe Trump will get to this, starting if you're 21 years old or younger, your retirement age will be 80, okay, or 82, because of course they're projecting people living well into the hundreds. This is something that should have been done years ago, okay? And of course, Social Security has got a $29 trillion shortfall coming in the next 8 years, okay? Think about that number. And again, that would also affect Medicare, okay? Because the doctors and the hospitals steal from Medicare like they were printing money. Because listen, I'm on Medicare, and I don't pay anything, and they keep ordering up all these tests. I go, I don't want these tests. I mean, my mom's 96 years old. She goes, well, it's paid for by Medicare. I said, that's not the point. I'm paying for you. Well, I'm not paying for you anymore, but I used to pay for that for you. And it shouldn't be that way. All of these programs should be pushed down to later ages. You can't do anything for somebody who's in their 50s and say, well, no, you can't get to your 80. But you can start at 21 and below and say the new retirement age is 82 or 83. And then you would start saving money because the rollover wouldn't happen so fast.
Let's talk about a force that's already setting the stage for silver's explosive rise: gold's record-breaking rally. Gold recently smashed through the 2,947 barrier, hitting an all-time high. And history tells us that when gold moves, silver doesn't just follow, it surges with a vengeance. Bubba Horwitz sees this as the final countdown, because when gold takes the spotlight, silver waits, then steals the show. But why does silver lag behind gold? And more importantly, why does it outperform once it starts running? The answer lies in the gold to silver ratio. This key metric shows how many ounces of silver it takes to buy an ounce of gold. Right now, the ratio is flashing a massive buying signal. Historically, when gold hits new highs, silver doesn't just catch up, it overcompensates. The last time gold broke records in 2011, silver exploded from $9 to nearly $50 in just 3 years. That's a gain of over 400%, and today, the setup is even stronger. Gold's rally is driven by fears of economic instability, central banks hedging against inflation, and geopolitical uncertainty. But silver? Silver adds another layer. It's both a monetary metal and an industrial powerhouse. As gold keeps climbing, silver builds momentum. And when it breaks out, it does so with violent speed. What's driving gold's rally now will soon drive silver's surge. Let's look at the facts. U.S. President Donald Trump's latest tariff threats have rattled global markets. Proposed 25% tariffs on auto imports, semiconductors, and pharmaceuticals are raising fears of economic disruption. Investors are rushing to safe haven assets. Gold has responded immediately, but silver is still sitting at a fraction of its historical peak. And here's where it gets critical. If gold challenges the $3,000 mark, and it looks like it will, silver, it could surge past 150 years in its wake. Because the gold-silver relationship isn't just historical, it's mechanical. When gold moves into uncharted territory, silver becomes the affordable alternative for investors who missed the gold rally. The surge in demand drives silver prices higher, faster, and more dramatically than gold's initial run. But this time, it's not just investor demand driving silver's breakout. Industrial demand is surging, the banking system is cracking, and the dollar is weakening. All these forces are converging, creating a perfect storm for silver. Bubba Horwitz isn't just predicting silver's rise, he's warning that this could be the most aggressive silver bull run we've ever seen. So, ask yourself this: if gold has already made its move, how long before silver explodes? The market is showing its hand. Gold's rally is the signal. Silver's breakout is the coming reality. Because when gold shines, silver doesn't just follow, it races ahead, leaving latecomers stunned. Bubba Horwitz believes that $150 silver isn't a dream. It's the logical
Of
next
Ron
step.
Paul. I love
And
his
if history
idea
is any guide, the
of
window to
ending the
act is
Fed.
closing fast.
I think the Fed, as I said, is a cartel. I mean, they are a bunch of thieves that met on Jekyll Island, okay, and the Paul Warburg, Rothschild family, J.P. Morgan, and of course the Rockefellers. And we all know that a lot of those guys came out of the railroad business before the Fed, and it was a scam, okay? And the Federal Reserve is more or less a scam. They are not anywhere near their mandate. The original mandate was jobs and price stability. They were not meant to manipulate interest rates, okay? They were not meant to make it better for those who have money to be able to borrow money. They were meant to create stability, and they did not do any of that. We are not supposed to be bailing out a business that goes bad. In the true capitalistic system, people go out of business all the time. If somebody else comes in and takes their place. So I would love to see Ron Paul come in. I would love to see, they're never going to end the Fed, or at least not in our lifetime, I don't believe. But I would love to at least see a true audit of the Federal Reserve and a true audit of Fort Knox and a true audit of what our actual assets are. Because if you look at the Doge program and you look at the money that has been spent, I mean, there was a direct payment going to the Wuhan labs who brought COVID in. So I'd love to see all this corrected. I don't know if Trump's got enough time to get it all done, but if we can get on the right path, okay, I would think it would be a lot better for all Americans, not just libertarians like you and myself, not just Republicans, and not just Democrats. I think everybody would benefit if they would actually go into some normal spending and quit the bailing out and quit the overall spending and let the free market determine, what interest rate should be, because you are too young for this. But when my first mortgage was 13%, and it didn't bother me at 13%, most people that are in their 40s or younger don't understand that these rates right now are historically low. So guys like me would go out and borrow every dime that I could because I can return more before the reason raises. I could return more money on investing it than it cost me to borrow.
It all comes down to this, the final surge, silver breaking past 150s and beyond. Bubba Horwitz's warning isn't just a bold prediction. It's a culmination of unstoppable forces converging at the perfect moment. Hyperinflation is looming. Banks are teetering on the edge. The dollar is weakening. Industrial demand is surging. And gold's record rally has set the stage. The pressure is building. And when it explodes, silver will be the last lifeline investors cling to before total financial annihilation. Think about everything we've covered. Hyperinflation doesn't creep. It detonates, wiping out the value of fiat currencies overnight. When that happens, investors won't hesitate. They'll run toward hard assets. Silver's motion will lead the charge. The banking system, hollowed out by years of over-leverage and risky bets, will vaporize in the blink of an eye. The trust that once held it together will dissolve, sending investors scrambling for tangible wealth. Silver they can hold, not just promises on paper. The dollar, once the bedrock of global finance, is losing its grip. As global powers shift away from dollar dominance, its decline accelerates. And every step the dollar takes downward is a step silver takes upward. Silver's industrial demand adds fuel to the fire. The world's transition to green energy, the rise of electric vehicles, and the rollout of 5G technology create a relentless demand that mining supply simply can't match. Above-ground silver stocks? Mostly immobile. Investors expecting a flood of silver hitting the market as prices rise will be caught off guard when they realize the supply isn't there. The myths of market manipulation and COMEX drains? They'll finally become reality when physical demand overwhelms the paper market. And then there's the Fed, the wild card. Whether the Fed stays hawkish or pivots dovish, silver wins. A hawkish Fed risks a financial meltdown, while a dovish pivot triggers inflation and weakens the dollar, both outcomes propelling silver higher. Gold has already sounded the alarm, smashing through record highs and signaling the next phase. But silver is preparing for a breakout that will dwarf gold's gains. When silver moves, it moves fast, outpacing gold with explosive rallies that leave latecomers stunned. Bubba Horwitz's prediction isn't speculation. It's the logical outcome of economic forces, market mechanics, and investor psychology all converging. Silver surging past $150 isn't just possible, it's inevitable. The scramble will be frantic, the supply short, and the price unstoppable. So the question is simple. Will you be prepared? Because when financial hell breaks loose, when the dollar dies and banks disappear, silver will be the last lifeline. But by then, 150 silver might just be the new floor, not the peak. And remember, this is not financial advice. Always consult with a financial professional before making any investment decisions.